Right, I think we'll get started. Well, good morning, everyone. Thank you for coming and welcome to the Money Festival. We appreciate you taking your time to expand your knowledge and become more educated on money. And we hope that today you'll leave the session feeling more empowered about your choices involving money, and you'll have a better relationship with money. We'd also like to thank our sponsors, ARU Student Union, and also our event competition page that will be discussed further in a second. Please make sure you follow us on Instagram and Facebook at Money Festival 2020 for more updates following the final webinar session next week. The terms and conditions of the event call have been posted in the chat and have also been sent to you via email. This call will be recorded. Please ensure your mics are muted and webcams are off during the presentation. There'll be an allowance for a Q&A at the end of the call. And please save your questions until the end or post them in the chat and we'll address them at the end. We also have an exciting competition in which you can participate in. We have 5 £50 gift vouchers to be won and 5 books written by Professor Alan Barrell to be won by you creating your own money art, expressing your perception and relationship with money. The competition website is now live. 12 are prizes is the platform we'll be using, and it's run by the 12 Ronnies Foundation, which supports ideas and innovation through prize competitions. They also help companies crowdsource ideas as well as look for ideas to solve some of society's big problems. Further details of how you can enter the competition and the categories of entry and how you can have your voice heard and ultimately win the guest and gift prizes can be found on the competition website, which will be posted on our Instagram and Facebook at Money Festival 2020. Now to our illustrious guest speakers, Dr. Imko Meyenburg, a senior lecturer in economics and international business, and surprise guest Catherine Hasegawa, a social activist, and Henry Williams, a British Venezuelan activist and politician.
Well, thank you very much for having me. I guess I have to start today. Yeah, thank you for organizing the event and inviting me. And I have been kind of like in the background with the beginnings of this activity and this project Catherine has developed over the years. And today, my part is basically to talk a little bit about hyperinflation, the background, and where all this stuff is coming from, what it means. So I have collected a bunch of reasons. They're not all necessarily applicable to all cases of hyperinflation, but we have like a general overview on what can cause hyperinflation, and all these effects basically work together. So let's start with a definition or attempt to define hyperinflation. So on the leaflet and on the Student Union, you have cited the Corporate Finance Institute, which described it as a situation where prices of goods and services rise uncontrollably over a defined period of time. Right, so it's basically very, very rapid inflation, which means that prices basically just go up massively. If we look at the how economists talk about this stuff, we have at least, well, the standard definition talks about it in terms of 50% of inflation per month. So when prices go up by 50% every month, then we talk about a situation where we have hyperinflation, right? Something else we can observe is basically, beside the price rises, also a tendency to convert money into goods, right? So we flee into something else and try to avoid using money. And a more recent occurrence or part of the definition is that we try to convert our domestic money into foreign currency, right? Just to avoid the issues with regards to the price rises and in the domestic currency. And I guess Catherine and Henry can talk a bit about more in the case specifically on Venezuela, what's going on there. Okay, so this is kind of like, what we look at. Okay, we have, increasing prices by 50% at least. That's the standard definition, and people tending to use goods rather than money, and we have a tendency to hoard or get foreign currency rather than ours. So what causes hyperinflation? Hyperinflation is not a issue or phenomena that has a single cause. There's always something else. There's always a multiple of causes going on, and they are somewhat interrelated. And only if some of these things happen at the same time or after another, then we can really find situation, or then hyperinflation can happen, right? So here we got kind of like a number of different causes we can find, and I'll go through all of them in detail, just for your information, to kind of like say what they mean. If you were to investigate issues of hyperinflation, around whether it's the Weimar Republic, Bulgaria, or Zimbabwe or Venezuela as recent occurrence, then you will probably find some of these causes there if you make a little bit of investigation there, a bit of studying these countries. Right. Okay, so let's start with the so-called distributional conflict. So what that basically means is that we assume kind of like the following. So we assume standard-wise that firms, businesses are setting the price and they make some markups, right? So it's standard stuff you learn in your business studies, I hope. Right. We also see that wages for workers are the biggest cost in the firm. We also assume that workers kind of want more money every now and then. A pay rise is always nice, and I've been asking my bosses for quite a while now, but I've been unheard so far. And an increase in wages kind of depends on the so-called bargaining power of workers. So whether or not you can actually make claims to have more money, right? And bargaining power depends on whether or not you're organized or not. So usually we say if you have unionization, right? If you can organize in a union, you have more bargaining power. If unemployment rates are low, you have higher bargaining power. All these kind of things, add towards your bargaining power. And in Venezuela, for instance, you've seen an increase in bargaining power around the 1970s. With the introduction of minimum wages and the introduction of legislation which allowed for unionization, so worker can organize themselves. That kind of like plays in a part. So if we as a collective have the power to ask for more money, then it's easier to get it. So if bargaining power increases, the target to have more money increases as well. Firms on the other side have a tendency to keep wages low, decrease wages, because it's the highest level of costs, and you always want to minimize costs. And market power for firms determines their ability to suppress that, right? So it's always a kind of like a tug of war between the firms and the workers as to one side wants more money, the other side wants to reduce costs. And also interest rates and exchange rate kind of like influence firms' costs, so they look at that as well. And as a result, we have this distributional conflict between labor and non-labor, right? So, if we are able to ask for more money as workers, which increases the cost for our firms, which will then be translated into higher prices for our goods and services, right? Simple mechanics, basically, right? So that's one cause. It's not the single cause, but that's something that can happen, and it happened in Venezuela and elsewhere as well. On top of that is the so-called indexation mechanisms. It sounds very complicated, but it's quite easy. So we anticipate an accelerated inflation. We have expectations about our future. And our current income levels will fall below the acceptable level, and we want to have more money, right? So we now know, okay, I make so much money now, inflation will cause prices to rise. So my current level of income will not be sufficient enough to sustain my lifestyle as it is right now, so I need more money. So firms will anticipate that, right? So it's not only you who makes this calculation, but your bosses will do the same, and so they will take this into consideration and then add this to the prices, because they will expect you to come one day and ask for more money. So they, put this on the markups and change the prices, which in and itself then accelerates the current inflation rate even further, right? So our future expectations play around in here. Okay, quite quickly going through here, but yeah. So next one is calculate the trade situation, right? And this is very interesting in the Venezuelan case, right? So the balance of payment and the exchange rate are important to understand what is going on. So what happens? So we look at a so-called non-diversified economy, right? Which basically means you have very little diversity in terms of what your economy actually does, right? So a country like Venezuela, that's the one, has a very big focus on the oil industry, right? Similar to other countries. But there's little to nothing else, especially in terms of the export industry, right? So you have a non-diversified economy, and at the same time you have a lot of foreign capital which is needed for your domestic productive activities, meaning that you need to import raw materials or any kind of stuff which you then use for your local businesses and factories and stuff like this, right? So this has been a specific and structural problem in Latin America. So it's not only Venezuela, all Latin American countries have this issue. They need to import a lot of stuff, raw materials and other things, specifically from the north and the US, in order to have their businesses running and so on and so forth. At the same time, we observe a shortage of foreign reserves in order to pay for this, right? So in order to buy stuff, let's say from the United States or from somewhere from Europe or so, you need US dollars and euros to pay for it, right? But you have in Venezuela, you have the Bolivar, I think that's the one. Please correct me later if I butcher that name. But you have your a domestic currency, but you cannot use that to pay it. You need foreign reserves basically, and there's always kind of like a shortage, because where do you get it from? You need to buy it from the US as well, in the same way you buy it from your your goods and services and raw materials. So this causes an increase in the demand of foreign reserves in your economy, which normally leads to a depreciation of your local currency, creating more inflationary pressures, right? So you're moving away from using your local currency on the international markets. You increase the demand for US dollars, for instance, and then your local currency, your Venezuelan bolivar, just drop in the exchange rate, making it even more expensive to buy foreign goods and services and money, right? So that increases another more the inflationary pressures here, right? And if these all starts to add up, it gets worse and worse and worse and worse. Okay, so this is the exchange rate, the balance of payments, exchange rate situation. The next one is the central bank one. So here we have essentially what is happening is that the central bank in your country loses the ability to do sovereign monetary policy, right? So the central bank is responsible for setting like interest rates and providing money supply and any kinds of things they need to do in order to ideally, control inflation in your country, right? Most central banks aim to control inflation in your country, but somehow a central bank in your country will no longer be able to do this, right? And there are several reasons as to why. So one is that, again, due to the balance of payments issues and so on, you have a high demand for foreign reserves. So your central bank needs to issue more national money in order to be able to exchange or purchase these money, right? So in order to be able to buy US dollars with Venezuelan Bolivar, you basically need to print more of it in order to, meet the demand in order to buy this stuff, right? Sounds really complicated, but that's basically the case, which again flushes more money into the economy, and that increases, more inflationary pressures. The picture on the right is a case in Germany. In Germany, during the Weimar Republic, it was a little bit different. It was not foreign exchange necessarily, which the central bank had to exchange. It was local, so-called emergency money. So local banks, as well as basically everybody, because of the shortage of the Reichsmark during the Weimar Republic after World War I, they had so little national currency available that they were allowed to print their own money. And the central bank had to exchange it. They were legally obliged to exchange whatever they printed, right? So you could just go to your local bank. In this case, it's the Leobschitz, city of Leobschitz. I don't know where that is, don't ask me. But, so they could basically print their own money, and then the central bank had to exchange it, right? So it's the same situation with, the external reserve, but there's just exploded the money supply in that country. Related to that, and you will see, and I think Henry will talk about this, there's a gradual rejection of your national currency as a result, right? And you see like a so-called dollarization of the economy. So you ask for more foreign currency, and even locally you start using that foreign currency more and more, because it's much more stable to use, right? So because of high inflation of your local currency and your liquidity preferences, you need more money in order to buy stuff. You just swap and go to using the for instance, US dollar, right? This was the case in Zimbabwe. Basically, if you wanted to do any kind of real business, you had to use the US dollar. Nobody would accept the local currency anymore. And I don't know, I think it might be the same situation in Venezuela. Again, I hope Henry and Catherine will be able to elaborate on that one. So again, you have something linked to the exchange rate and balance of payment, and that has an impact on the ability of the central bank to do their job. The last two are the so-called Dutch disease and the loss of war. So the Dutch disease basically means that, again, you have a resource abundancy, right? So in Venezuela, and I think it was around the 1920s when they discovered oil, and Venezuela is very, very, very rich in oil, right? So this kind of creates an over-evaluation of your exchange rate, because you can just export oil and oil and oil, and everybody wants to buy your oil, which pushes up your exchange rate, which makes your currency very, very valuable. This is, however, a problem, and that happened in the Netherlands as well. That's why it's called Dutch disease. The high exchange rate is very, very negative for any other export sector, right? So you have resource abundancy. You think you're really, really rich in terms of this resource, and it is true. But this pushes the exchange rate up. You are becoming export dependent on that one, and you're very much focused on this resource extraction, less in the case of oil. Most countries depending on oil exports in OPEC and so on. So this high exchange rate makes other export industries less competitive internationally. Why should I buy, I don't know, Venezuelan cars, which might be twice as expensive because of the exchange rate, twice as much expensive than maybe Mexican cars or so, right? So and as a consequence of that, because we are so determined to sell our resources and make sure that we have have this massive income through the oil extraction, and the impossibility for other industries to export properly, it leads kind of like to a so-called premature de-industrialization, right? So less and less export-driven industries will be there. Basically, they kind of like start to disappear. Less and less people work in these areas, and so on. So they shift to other sectors of the industries, which are less exporting industries. We also see sometimes, not always, but in the case of Venezuela particularly, a decrease in productivity and private investment around that time. So that started already in the 1980s, right? And as a consequence, you basically lose your ability to have a diversified economy, and everything is dependent on a few export-driven industries, really. And then the last bit, loss of war, is not so important for most countries, which is something that happened in Germany. Germany lost World War I. And the specialty here is that the so-called Treaty of Versailles basically forced Germany to pay reparations of around 132 billion gold mark, which is in 2021 equivalent 284 billion pounds. So there was, and they had to pay this with gold marks. So there was a shortage of gold marks, right, in order to repay them. And on top of that, we had the privatization of the Reichsbank, which meant they had to exchange local currencies. They developed this emergency money, which is technically the same principle as with using dollars just to buy. The introduction of the emergency money, as I said, and then there were also a number of speculators just buying US dollars in order to speculate against the Reichsmark or the gold mark in that time. So to get themselves rich. So I'm not quite sure what the side in Venezuela, or how many speculators were betting against the currency there, but it's very likely that it happened. And usually speculators and very rich people are the ones who can get away and get actually richer in this situation, whereas a lot of normal people really had to suffer through that time. So these are some of the main contributors to the situation around hyperinflation in wherever it is occurred. So, and they all kind of interact with each other. You have the trade situation, the Dutch disease situation, the central bank situation, and so forth. And that basically is the end and leads to such wonderful pictures where you use your money to fly a kite rather than anything else. Okay, that's my part, and I will lead over to the rest of you guys.
Thank you very much, Dr. Imko, for that thought-provoking presentation. It was very in-depth. I have some questions for you myself regarding that after we move on to Catherine and Henry, who are going to talk about their personalized interpretation and understanding of hyperinflation in their home country. We'll also move on to the hyperinflation game. Bear with us for a minute just as we hand over slides, etc.
Thank you very much, Anush and Imko, for introducing the event with such insightful information, and thank you so much for speaking a lot about my country, Venezuela, and also Henry's country, who is going to support us today with the game. So, well, as you mentioned during your presentation, Venezuela is famously the country with the largest oil reserve in the world, and its economy is based primarily on the production and extraction of petroleum. However, mismanagement of the economy by those in power has led to hyperinflation. Since Nicolás Maduro rose to power in 2013, the people of Venezuela have experienced dramatic economic decline and have become victims of a humanitarian crisis. The country has been in a legally defined state of emergency since 2015. The economic collapse has left the Bolivar almost worthless. This economic collapse has driven approximately 5.5 million people to leave their loved ones and their country behind, who search for a living that will allow them to send money to family members who are not able or eligible to be employed abroad. Indeed, the United Nations has predicted that this number is likely to rise rapidly in the next few months, unfortunately reaching 6 million and beyond. So saying this, the dire consequences of hyperinflation have been woefully underreported in the mainstream media, and it is why, with this activity framed as a game, the hyperinflation game, we intend to raise awareness among university students and all of you about the long-lasting effects of living under these extreme conditions. So, about the game, the hyperinflation game is an interactive crash course on the principles behind the crisis. Its purpose is to demonstrate how hyperinflation works and what may have caused it in Venezuela, as well as to provide a space for you to reflect on the consequences that, well, they are unleashed by the poor management of a nation's economic resources and money supply. So, through this role-playing game, you will enter a simulation using bolívares, which is the Venezuelan currency. You will be assigned a monthly income, and you will be provided with a price list of basic and non-essential goods. When I say non-essentials, let's say that is a trip or a language course, but yeah. So this is a poll, that will appear in the chat box. So you have all to open your chat boxes. And Christina, who is a member of the Money Festival, we have been all working on the Money Festival. Anuj, Christina, I don't know if you can see her here, Victoria and Tatiana. So Christina is going to help us kindly with running the poll. So just briefly, it will work like this. You will have a series of 4 rounds, and you will have just 1 minute to click as many choices as you wish from the poll. And yeah, so I must say that through this role-playing game, we invite you all to engage in a friendly and constructive way. Make decisions on how to spend the money that you are given. Be creative while developing strategies to solve problems. And feel free to share any relevant experience just after we have finished the game. And I could say that the outcomes that we hope you are going to get from today's experience is a genuine and long-lasting learning, and enrich your international economic and political knowledge. So just remember, good decisions making is critical to survive the worsening economy situation of a country. So let's begin with the game. I hope that you all understood, otherwise that we will have more time to speak about it. So I guess that you all have in the chat box right now the round 1, which is in the year 2010. The salary given is 1,000 bolivars. I'm not sure if the minute has already passed. I can see that the
minute has passed. Yeah.
Okay, fantastic. So Did everyone manage to find in the chat box the options and the poll? If someone didn't, please just raise your hand and we are happy to help because we want all of you to get part of the poll. Unfortunately, I cannot see the hands of the 33 plus people that have joined today. Thank you so much for joining this morning. But if someone have a question, just perhaps open your microphone. And if not, we will move to the next poll. Aha, there it is. So as you can see here, we are in the round 2. We have now moved to the year 2014. Salaries are higher now. Before you were giving 1,000 bolivars, you are giving now 2,000 bolivars plus 200 bolivars, which is a bonus. Because in Venezuela, it's quite common in the past years, it has become common to be given bonuses. So you can buy with that whatever you please. So just let's see if you can buy your things. So the list basically remains always the same. As you can see, it's just paying your house, your rent, services like utilities, water, electricity. Then you have education or pharmacy, which is it was for many years public. So as you can see, prices are very low. And yeah, I will also play it. It appears in my screen as well. How are we on time, Henry?
Yeah, just a few minutes. Yeah, it should be done now.
Okay, cool. Thank you. So how is everyone feeling? Anyone has a question? We are just 2 polls more to go. Thank you, Christina, for sending the next poll. So again, we have now moved to the 2017. In the 2000s, well, I will not say yet. I was about to say something, but I will leave that to Henry, who will explain us with more detail what is going on right now. If you kept any savings from the previous years, feel free to use them to keep paying your whatever you need, frankly. Ouch.
Okay, yeah.
Okay, thank you, Henry. So we are about to enter the last poll. Please, I invite you to find there in the budget list what you find different, and then later on bring that to our room when we open the discussion. Oh, I'm just saying here that it's important to mention that in this round, which is just today, which is today, 1st of February, you are being given 200,000 bolívares. So that's not dollars. We are not rich, of course. I would hope to be rich, but so you are being given in total 400,000 bolívares. But prices are in dollars now.
Okay.
Thank you so much, Henry. So Well, saying this and actually seeing the last round, you may wonder how you could pay something in bolivars if you are being given dollars. And that's what I would like just briefly show you with the next slide. I'm not sure, Henry, did you manage to put the dollar today? Okay, fantastic. Let me just close my poll. I hope everyone managed to fill your polls. So in here, we can see that dollar today is basically an exchange house, but this one is virtual. Well, no, I'm lying. This is not an exchange house. This is just a monitor, a way to tell the people how the exchange rate between $1 and bolívares. So as you can see here in the big number, just in the left right hand, I think I say it right. You can see there 1,788,000. So $1 means almost 2 million bolívares. Almost 2 million bolívares for $1. But you were given monthly just 400,000 bolívares. So as you can tell, not with that salary, you cannot even buy $1, but prices are now in dollars. So I wouldn't like to get much into this. I don't know if we have a next slide. Perhaps we do.
Yes, we do. Should I jump in?
Yeah, I think yes, you should. Thank you, everyone. I hope you enjoy.
Hi, sorry if you can't see my face at the moment. I'm just going to jump in and show you the next slide, which effectively shows the reality of the game that you've just played. Now, in front of you, you'll see the years 2012, 2014, 2016, 2018, and 2020. There are 3 lines on this graph. The line in red is effectively your price in barrels of oil. And you can see that it was at a stable sort of $75 per barrel. You'll see the same with the next line, which is Venezuela's currency reserves, which on the right-hand side, you'll see that it was sort of fairly stable at 25 billion. Now, around the time of 2014, as Professor Imko sort of showed earlier today, around 2014, you have this whole storm that occurs where the price of oil goes from $100 a barrel to 40, effectively around June 20th, 2014. And it is at that same time that you have the regime in power losing the sort of shine that it once had. So you see inflation sort of rising in 2013, 2014, and then 2015, going from 50% per annum to 69% per annum. And then effectively around sort of the middle of 2014, going above that 125%. And the reason why the green line, which is Venezuela's domestic rate of inflation, sort of you don't see it beyond 2014 and 2015 is, well, effectively it hasn't dropped since. And well, what we demonstrate with this graph is at that time in 2014, you have 4 different forces: the dwindling currency reserves, the public policies, which effectively an imposition of ideological views on an economic market, and a gross domestic product that is pushing this idea of high public expenditure, while there isn't any currency reserves or money in order to maintain those expenditures, coupled with a decline in oil prices, means that sort of the Venezuelan currency lost its value completely overnight. And as I'd like to demonstrate with this last thank you slide, as I'd like to demonstrate, if I just bear with me for one moment. So I'm just going to swap over to a different construct, as I'd like to demonstrate with a little simulation. The people who suffer under this storm or hyperinflation are the most vulnerable. When I was an undergraduate, I wrote this program in order to turn what was in fact a drinking game of higher and lower into a way of explaining to people the situation that was happening in my home country. So the way I was trying to demonstrate to people by using a game that was effectively a deck of 52 cards split into two, and each player playing the card that was on the top of their deck. And both decks were randomly generated decks, so there's no bias here. And as I'll demonstrate by playing the simulation, the player who wins is the player, as you can see here, with player one. The player who wins is effectively the player who demonstrates the fact that they have the strongest deck. And as Imko said in his lecture earlier, it's the speculators are usually the people who have the money in order to speculate. The victims of hyperinflation are normally the people without the resources in order to counter that dreadful consequence of speculation. So, and well, that's all I wanted to say about that one. So what I'll do is I'll stop there.
Well, thank you both very much for that interpretation of hyperinflation. I quite like the demonstration through sort of the drinking game. It's something we can all relate to, in my opinion. As Henry was saying, you aren't always in control of the cards you're dealt. And that's a good metaphor for hyperinflation and basically surviving hyperinflation in Venezuela. Without having the sort of having luck on your side, you basically have no chance. And I think that shows how dire and sort of sad the effects of hyperinflation can be on a population, and the poorest of the population who aren't in control of the cards they're given and are basically handed the cards. We'll now move over to a Q&A, which I think is perfect because I think Carol has a question. So we'll go straight to Carol.
Hi, can you hear me? Okay. Yeah, so now we've got this situation. How do you get out of it? It seems that mission impossible, right? So what's the way forward?
Okay. Is that towards myself?
Well, whoever can reply to me.
Okay. Well, the way out is effectively we need foreign direct investment. And as Venezuelans, we need to learn to diversify our economy beyond just the speculative price of oil. Another thing that we need to move beyond is this idea that public resources are something that can be hoarded by civil servants or public officials. Like, for example, with the graph that I sort of showed earlier, we had a situation where even though the country's reserves were near at around the 5 billion mark in US dollars, recently in Switzerland, they found that there were $10 billion that had been hoarded by public officials in Swiss bank accounts. So that money should have actually been part of the country's currency reserves, but clearly hadn't been. And it's not just in Switzerland that you've had public officials hide money. It's all over the world. It's also in banks in Andorra, and they're, billions of dollars that have been hoarded. So rather than using that capacity that's been generated through the sale of oil, it's always been sort of filtered off. So that it means that the challenge isn't just diversifying beyond oil, but also teaching and growing beyond that idea of not serving the people, but serving your own interests. And I think that's not just Venezuela. I think that's the whole of Latin America. We need to effectively grow up and demonstrate that we need to work in favor of the people and look after people rather than ourselves. And
so,
selfish.
Sorry, Henry, my question is more like, okay, so I live in this country, the currency is worthless. How do I start using it again? What would be?
You don't. As Imko mentioned earlier, what's happened in Venezuela is dollarization. So in order for people to live their daily lives, they've had to start adopting the dollar in their daily purchases. Because the Bolivar has lost so much confidence and people have lost confidence to use it as a means of exchange, the only thing that people are confident to use as a means of exchange now is the dollar. So what you've had is, because people have been playing God with the Venezuelan economy, people have given up on trusting the institutions of the country and have gone and backed the greenback. So
this currency will never exist again, then we scrap it forever? Or?
Well, the interesting thing about that is that you've got the dictator Maduro wanting to introduce his own cryptocurrency. And you have Venezuelans also engaging in Bitcoin, etc. So there's a lot of alternatives to the Bolivar, and I think just as people in Europe bought gold when 2020 went a bit funny, people go with what they feel safe with having as their reserve currency or to have their savings in. And the Bolivar is just not a safe harbor. So I hope that answers your question.
Yeah, well, just to mention, Carol, that answering these sort of questions is not an easy task. It requires so much understanding, like not just about theory, if not about why people behave in that way. Why in the first place do we have to be in this situation right now? So yeah, answering something like this is, I think, goes out of at least of my mind.
I'd be quite interested to see Imko's opinion on this, if Imko has one.
I do. Yeah, so on top of what Henry already said, it's the Bolivar is, you can just bin it basically, and what you can do is introduce a new currency, which has been done in other places, like Zimbabwe and in Germany in the Weimar Republic. And so what you could do is peg it to the exchange rate of the US dollar. So you don't have a floating exchange rate. You just, wherever the dollar goes, that one goes as well. This has problems as well because it could make the imports and exports problematic as well, because if you have a strong dollar, then you also have a strong Venezuelan currency, which means export and import issues are rising again. But we at least have a stable currency, right? So the trust in the currency is just gone. And if people don't trust in the currency, then you cannot use it. So you just need to introduce something new. What the Bolivian, why do I always say Bolivian? The Venezuelan central bank has tried during the crisis, and what could be continued to do is restrictions on capital flight. So, basically not allowing Venezuelans, especially rich Venezuelans, to, put their bank accounts offshore, things like this, because that's always an issue. Yeah, so these are things you could do basically, but the currency itself, there's probably nothing you can do really.
I think we've got some possible questions in the chat box. So if we can go to Oksana, if you could ask that question, if you're comfortable with that.
Yeah, hello. I would like to ask, what is the best, basically the safest asset to own during inflation? Thank you.
On one hand, there's not much. I mean, probably the safest asset in general is if you buy your own house, right? So if you put your money into your house, that will probably live long and ideally, and if it's built properly, it will not fall apart. So you have that. Artwork potentially, but that most of the stuff is if it comes to speculative amounts, it's very difficult to say, because like as Henry has said, like whenever there's a crisis, you see people fleeing into commodities like gold and silver and all these things, but they're also just valued because we value them. And if you if you go around in Venezuela nowadays and you say like, oh, I have gold, and most people just want to have food, then you probably won't get far with your gold if people are starving, right? So in extreme economic circumstances, even gold might not get you anywhere. But yeah, generally like hard assets which just continue to exist and have some kind of value generally in society are the safest ones really. So yeah, buy your own house. It's cheap now. Interest rates are down, so.
I think we now have a question from Zach. A couple of questions. Zach Carey, if you could unmute yourself.
Hi. Basically, what I was saying is not really a question per se, but I suppose I could make one out of it. So obviously there's this game that was founded in Cambridge called RuneScape, and it's just like an MMO game. It was relatively popular, in sort of like the early 2000s, but I think in the past year or so it kind of blew up because it came out on mobile, right? And this was something that was on computer for the whole period of its existence. But of course, it's now sort of producing itself as a viable way for many Venezuelans to be able to make money by selling things overseas. So I suppose the question could be, of course, sort of like online games and such are not really a viable way to support the majority of the lower class Venezuelans. But are there other alternatives using sources such as like the games, the internet, international communications that can get them sort of out of poverty? That's just an open question.
I mean, from my point
well, it's not just RuneScape. It's also World of Warcraft.
Right.
And it's a very sad situation because effectively it's a form of farming. And it's digital farming because, as Imko suggested, most of those people haven't got the capacity to have their own land. So your conventional farming isn't something that they can engage in. But I mean, personally, being an idealist, I think that people being given the capacity to be a bit more self-sufficient would probably be the best way to bring the country out of poverty. but whether or not that's quite a controversial policy to implement. There's definitely enough land in Venezuela in order to do that, and there's definitely a lot of land that is unused land and is fallow at the moment and has been effectively expropriated by the current military regime. So it would be possible, but it would involve something far beyond just digital farming.
Right, of course. Thank you.
That's all right.
I would also say that as interesting as the idea sounds to make money over the internet, either by playing games or any other way, you must always consider that like in countries like this, even here in the UK, you have a massive digital inequality, right? So you might be able to do this, but just look at your parents. I mean, I don't know about your dad, but my dad can basically play solitaire on his computer, and that's about it, right? So, it's developing self-sufficiency and income through online engagements. Is cool for young people, but I don't know about the demographics in Venezuela, but I think I would guess that looking at Catherine and Henry, that especially young people have left the country, and old people are left. So there's that kind of problem with people. Everybody will be able to generate income through those kinds of means because they lack the skills and technology to do so. So there must be something else coming in.
Do we have any other questions? If not, I'd like to jump in with one for Imko, if that's all right. What effect do you think a cashless society will have on hyperinflation? Just as we saw recently with sort of the problem with, well, not problem, I'd say it's quite funny and quite good, but with sort of GameStop and the use of Reddit to sort of boycott the stock market. It just, to me, shows how much the internet can have, of an effect the internet can have on economics. And as we move to more of a cashless society, I wonder what effects could further have and what you think.
Hard to say. I mean, like in the one sense, we already right now live in a relatively cashless society, because I don't know when the last time you had actually cash in the hand, but due to the pandemic situation, everybody's just basically paying now with their credit cards, like 2 meters apart like this, just to stay away from people. So it's not like people using a lot of cash these days, but that doesn't necessarily affect the problem of issues around hyperinflation, because what plays around here are issues around how do you who do you need to pay, right? So in the case of Venezuela, and other cases of hyperinflation, you buy stuff from someone else and you need to pay them, and you need to pay them in a different currency, and the exchange rate are the problem here, right? So it doesn't really matter how you pay them, right? If you pay them with cigarettes or something like this, doesn't really matter, or goats, or you can imagine, like if you don't have enough goats to pay, then you're indebted, and so the underlying mechanisms stay the same, even in a cashless society. And if you look at I mean, I haven't followed the recent case with regards to the stock market situation, but if you look at, for instance, issues around Bitcoin and so on, it's highly volatile, right? So one day you have one Bitcoin that's worth like $15,000, the next day it drops down to like a few $100s or something like this. So you basically it's so volatile, it's you cannot really trust the whole thing, right? And trust is an important thing, because what you want is a stable way to exchange goods and services. So I hope that answers the question.
Thank you. Yeah. I think over to Catherine now, who wants to say a special thanks.
Yeah, well, this is a super massive special thank you to Rafael Araujo, who is not here today, unfortunately. He was about to I mean, he's at the moment quite busy. He's taking his master's, but he intended to attend and help us with the game because Rafael Araujo from Brazil, a good friend of us, he's an alumni now from ARU, as you can see here in the picture. Thank you, Cristina, for showing it. Rafael helped us with developing and delivering several times the hyperinflation game at Anglia Ruskin University. And I just wanted to say that we really appreciate the effort that he has done. The slides used today for the hyperinflation game were made by them, just a little bit modified, but just to say that all of us has been doing this voluntarily, including our teachers and the guest speakers and everyone involved. So just a massive thank you to everyone. And yeah, over you, Anush.
Well, yeah, you're beating me to it, really. I'm going to thank everyone for attending the Money Festival webinar. We hope you enjoyed it. And again, a massive thank you to our guest speakers, Dr. Imko, Catherine and Henry, for educating us on these topics. The next and final event webinar we have will be taking place next Monday at 10 a.m. Same place, same time, with ARU professors Dr. Beatriz Acevedo and Victoria Tate, discussing the sustainability goals, development goals. Please ensure you obtain tickets via the Student Union website as usual. The event calling will be sent in due course via emails. And follow us on Facebook and Instagram. And also please check your emails for our post-event feedback form. We'd really appreciate it if you could fill it out. It can help us make the event better, help it make it better for you. And yeah, thank you very much, guys. We appreciate your time, and we hope to see you next Monday. And also, the competition website and link is in the chat now. So if you'd like to check that out and see how you can win one of 5 £50 gift vouchers and 5 books, then feel free. Thank you very much, guys, and we hope to see you next week.